Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate the support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about two ETFs to buy in February. The good thing that stands out about these ETFs is that they are well diversified, have a solid dividend payout, and have a low expense ratio. You want to have a well diversified portfolio so that you can get exposure to different sectors, regions, or market cap. If a certain sector, region, or market cap underperforms, you at least have other positions that can offset your underperformance. Especially with recent volatility, you definitely do not want to go all in and overexpose your portfolio to an underperforming market. You also want to have a solid dividend payout so you can generate a consistent passive income stream in addition to capital appreciation. Last but not least, you also want a low expense ratio so you have more assets in your portfolio than another with high fees and expenses. All right, first ETF is a Vanguard ETF, ticker symbol VIG. It's the Vanguard Dividend Appreciation ETF. In terms of performance, past week, up 2%, past month, up 8.27%, past 3 months, down 0.01%, past year, down 4.81%, and past 5 years, up 36.81%. Let's go down a little bit. The 52-week high is $112.61 versus 52-week low of $91.61. So as you can see, it's in between that 52-week range. Market capitalization is $30.77 billion. P/E ratio is 23.6, and dividend yield is 1.93. All right, let's jump to Seeking Alpha. So I'm going to look for VIG. So it's the Vanguard Dividend Appreciation ETF. In terms of the strategy, it tracks the performance of a benchmark index that measures the investment return of common stocks of companies that have a record of increasing dividends over time. And you want a track record of increasing dividends, so it's a consistent revenue stream. In terms of returns, like I mentioned, 52-week range is 91.68 to 112.61. Asset under management, $30.3 billion. Expense ratio is fairly low. Anything below 0.1% is not bad, so it's a 0.08%. Dividend yield is 2%, and dividend payout is $2.04. In terms of holdings, the sector breakdown is industrials 27.7%, consumer is 17.05%, healthcare 15.5%, consumer stocks 11.48%. So it's consumer cyclical and consumer staples and consumer discretionary. And then technology is 11.18%, financials 8.16%, and basic materials 5%. In terms of top 10 holdings, there's Microsoft, Walmart, Johnson & Johnson, PepsiCo, McDonald's, Abbott Labs, Medtronics, 3M, Union Pacific, and Nike. And that makes up 33.03% of the ETF. And total holdings in the portfolio is 187 stocks. Majority of these stocks are large cap, so blue chip, dividend paying stocks. So I'm going to go back to Robinhood. The next ETF I'm going to talk about is VYM. It's another Vanguard high dividend appreciation ETF. In terms of performance, past week, up 1.59%. Past month, up 8.02%. Past 3 months, down 0.73%. Past year, down 9.02%. And past 5 years, up 31.38%. In terms of some statistics, 52-week range, the high is $90.93, low, 52-week low, $73.18. That's somewhere in between the middle. The market cap is $22.26 billion. P/E ratio is 18.7 and dividend yield is 3.15. All right, let's go to Seeking Alpha. Look at VYM. Vanguard high dividend yield. So in terms of strategy, it tracks the performance of benchmark index that measures the investment return of common stocks of companies that are characterized by high dividend yields. And as I mentioned, 52 range, $73.18 to $90.93. It's somewhere in the middle. Asset under management, $22.1 billion. Expense ratio, like I mentioned, anything below 0.1% is not bad. It's a 0.08% expense ratio. Dividend yield is 3.26%, and dividend rate is $2.65. In terms of holdings, healthcare makes up 15.59%, financials make up 15.04%, consumer stocks 14.14%, technology 10.88%, industrials is 10.57%, energy 8.74%, utilities 8.23%, and communications make up 6.68%. Top 10 holdings include Johnson & Johnson, JP Morgan, ExxonMobil, Pfizer, Verizon, Procter & Gamble, Intel, AT&T, Chevron, and Merck. So that makes up 27.12% of the ETF, and total holdings in the ETF is 403 stocks. So these are all high dividend, blue chip, large cap companies. So that's all for this video. What are you investing in? Comment down below. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.